Hey traders, welcome back to another episode. In this video, we'll cover our Heiken Ashi trading strategy in detail and how we use it in conjunction with price action. Heiken Ashi candlesticks are very powerful because they smooth out price action. As a result, the excess noise seen in traditional Japanese candlesticks is largely eliminated in Heiken Ashi charting, making trade entry and exit decisions much simpler. If you want more videos like this, please hit the like button and subscribe to the channel. Before we begin, a very important point. The concepts we'll discuss in this video can be applied to currency trading, stock trading, and crypto trading, as price action remains relatively consistent across different assets. So, in this video, we'll delve into them quite deeply. Before we delve into the core concepts, you might be wondering why we should use Heiken Ashi bars for our trading. The simple answer is that it makes trade entry and exit decisions much simpler. Just look at these two charts, and you'll see the difference. Heiken Ashi generates a much smoother chart, making it much easier to spot trends and reversals, especially when compared to traditional candlestick bars. Just like candlestick bars, there are many different types of price action patterns: doji, gravestone doji, dragonfly doji, pin bars, engulfing candlesticks, and the list goes on. There are literally tons and tons of candlestick patterns. But with Heiken Ashi bars, I've simplified them all and categorized them into just three main types of price action patterns. First, bullish Heiken Ashi bars. In bullish Heiken Ashi bars, you'll notice that there's a wick at the top of the bar, but no wick at the bottom. As long as it's an up bar and doesn't have a bottom wick, we'll consider it a bullish signal. Second, bearish Heiken Ashi bars. Bearish Heiken Ashi bars are the exact opposite of bullish bars. They have a wick at the bottom, but no wick at the top. As long as it's a down bar and doesn't have a top wick, we'll consider it a bearish signal. Third, indecision Heiken Ashi bars. To further simplify Heiken Ashi bars, all bars that have wicks on both the top and bottom are considered indecision Heiken Ashi bars. It doesn't matter whether the color of the bar is bullish or bearish. If there are wicks on both sides, it's an indecision Heiken Ashi bar. Now, let's discuss how to enter a trade using Heiken Ashi bars. Whenever you see a bullish Heiken Ashi bar, it's tempting to go long immediately. Or, when you see a bearish Heiken Ashi bar, it's tempting to go short. But please, control this urge. I know some people preach this method, but I know you're smarter than that. So don't do it. If you want a real edge in the market, certain criteria must be met before entering a trade. Buying rules. Long position criteria. Rule number 1. The higher time frame must be in an uptrend. This means that the market must be making higher highs and higher lows on the higher time frames. If you're trading on a 1-hour chart, your higher time frame would be a 4-hour chart. And if you're trading on a 4-hour chart, your higher time frame would be a daily chart. I personally don't like to trade on time frames below the 1-hour chart. Firstly, watching them constantly is quite tiring. And secondly, commissions and spreads on lower time frames eat up a significant portion of your edge. This doesn't mean that trading on lower time frames can't be profitable. Criteria number 2. The 10 exponential moving average must be above the 30 exponential moving average. I use the 10 EMA and 30 EMA to determine trend momentum. Criteria number 3. Both criteria 1 and 2 must be satisfied on the time frame you're trading. I wait to go long when these three criteria are in place. When the price bounces off either the 10 EMA or 30 EMA, and the first bullish Heiken Ashi bar forms a higher low, we take an entry and place a stop loss below the current swing low. Criteria for a short trade. Now that we know the criteria for a long trade, the criteria for a short trade are exactly the opposite. Criteria number 1. The higher time frame must be in a downtrend. This means the price is making lower highs and lower lows. Criteria number 2. The 10 EMA must be below the 30 EMA. This is fairly straightforward, and by now you shouldn't have any difficulty identifying it on the chart. Criteria number 3. Both criteria 1 and 2 must be satisfied on the time frame you're trading on. When these three criteria are met, I wait to go short. When the price bounces off either the 10 EMA or the 30 EMA, and the first bearish Heiken Ashi bar forms a lower high. Now let's discuss the exit strategy, as this is a trend trading play. We will exit the trade only when the price makes an overbought move. Do it. But then the next bar should again form a bullish Heiken Ashi bar. Or, if you're short, the same thing could happen in the opposite direction, and that's totally fine. You can't capture every market move. Ultimately, if you're overall profitable after a series of trades, that's what matters most, okay? That's enough theory. Now, let's look at a trade example that will help you understand exactly how to enter and exit a short trade. In this chart, you can see that the market formed a lower high and then bounced off the 30 EMA. As soon as you see this, the next step is to wait for a bearish Heiken Ashi bar to form. As soon as it forms, take a short entry at the close of that bar. The market then drops sharply, and then indecisive Heiken Ashi bars begin to form. This isn't a good reason to exit, as the market could simply be consolidating and about to move lower. However, in this case, the price didn't move any lower. Instead, a bullish Heiken Ashi bar formed. This means you should exit the trade at that bar's close. Now, let's look at an example of how to enter a long trade. In this chart, on the left-hand side, you can see that the price first spiked sharply higher and then began to consolidate. Consolidation in an uptrend is a good sign, as it could mean further upward movement. The market bounced off the 10 EMA, and the first bullish Heiken Ashi bar formed. Take a long entry at that bar's close. The price then moved higher. Then, an indecision Heiken Ashi bar formed. But as soon as the next bar after that indecision bar formed a bearish Heiken Ashi bar, that was our exit signal. Exit the trade at that bar's close. Luckily, the price later went down further. But not every trade will be like this. As I've said many times before, it's impossible to capture every single move of an entire trend. You can only capture the parts your trading system allows. And in the long run, this consistency will lead you to profitability. Now, here are some more Heiken Ashi trading strategy examples. That's it, traders. That's all for today. If you learned something new today or want more videos more frequently, subscribe to the channel, click the notification bell, and leave a like to show your support. See you next time.